Microphone check. Testing. Testing 1, 2, 3. This is Trader Interviews. Real talk, real traders. Hey everybody, I'm Rob Booker, and welcome again to Trader Interviews. I'm here today with Gil Ben-Hur of The5 Percenters. I'm going to read something from your website, Gil. The5 Percenters is a funded trading and growth program. We provide unique career enhancers for worldwide Forex traders, including an accelerated growth plan to boost capital levels and earn higher profits. And your fund was established by two former professional Forex traders whose visions were to create an open career building platform for Forex traders. I'm super excited that you're here. Thanks so much for joining me.
Thank you for having me.
One of the reasons I'm so excited about what you do is that you have created a path for traders who have built a strategy and who have had some success but don't have access to capital.
Right.
Can you tell me a little bit about that?
Sure. This is the main challenge that every trader is actually facing. Forex is I think maybe the only market that people trade everywhere. Similar to my experience, I'm from Israel. We don't have big capital hedge funds over there. Right. And I was trading for fun. I really loved Forex and I found my success in it, and I couldn't find a job in it. You can imagine that there are so many talents out there that are not really fulfilling their potential in trading because they don't have access to sufficient capital to make a living off. So they're trading part-time or they're doing it as a hobby, but they still dream of doing it in a professional way. So we've created this work frame where they can just sign up, show they are talented, and from that on, we can only scale up.
And you've been in business since 2007, is that correct?
In trading since 2000. I was introduced to trading in 2007. And it took me a while to understand what will bring me success.
There's a number of things that made me really interested in talking to you. One is your business model for working with traders. Two is your perspective on risk management. I definitely want to get to that. And at the bottom of this page, folks, there's going to be a link to be a part of the program. I'm going to sign up for the program today myself. I think for a lot of reasons, it's a big fit for me. And I hadn't heard of your company before. There are other companies that spend more on advertising and have put their names out there, but your business model is unique, and I love the way that you do business. So I noticed on your LinkedIn profile that you went to film school. Yeah. So you have this artistic background. How does an artist get interested in trading, and then from trading even into entrepreneurship?
Yeah, well, being an artist was how I grew up. I lived with a single mother. And she was a painter. She was doing big works of abstracts. This is how I lived, and I didn't have a father to teach me about how money works, how business, how you can actually earn money. So I thought I'm going to be something in creative. My first job was in advertising agency as a copywriter, and then I went to film school. I always wanted to be in the creative. This is what I knew. I knew nothing about business. But then when I had my family, my kids, I realized that I don't know how to maintain a business. So I started taking some courses about business and entrepreneurship. And one of them was trading. Okay. And back then in 2007, Forex was really massive. Everyone was advertising, and also because of the time zone that I was, Forex was just perfect for this. Waiting for the US to open, it's afternoon for us, so Forex was very available, and they were the first to give free demos, and so you have everything. You have the practice, you have the schools, you have free information, and you can trade anytime. So I was hooked to this, and so.
Were you immediately successful?
Absolutely not. The paradox in trading is that when they teach you about technical analysis, everything seems it's very graphic. You just draw lines and you see, you see this channel, you see this trend line, you see this, you see that. Everything is very visual, and I come from a visual background,
Right.
and it really makes sense. And on the inside, everything also makes sense. You see the strategy on the history, and you see it works.
Right.
And then you go in real time, and it doesn't work. So you always have this in the back of the mind that something is here to be resolved, and you will be able to make it. And the thing is, it took me a few years. So I did all these side jobs, and at night I would study and do back tests and everything, until I was introduced to supply and demand theory, and then from that on, I managed to make it.
So I'm going to leave the viewers out there. You can look up supply and demand theory and strategies and whatever else, and we can get to that if we want to. But what really interests me about the information on your website and the blog posts you've done and the webinars I've watched and the recordings of the webinars that I've watched and your YouTube channel is that you and I share this belief that, listen, I don't care what your strategy is, your risk management is where you're going to make money or lose it. And I've read on your website, there's no such thing as a perfect trading strategy, full stop. Repeat that to yourself over and over again. I love that. And then there's a very common misconception that people come to trading with. Many come with an attitude, like you said, that the market can be resolved with simple things like trend lines, trending channels, chart patterns, and so forth. Okay, we both agree that, listen, if you want to trade with the moon phases, or you want to trade with trend lines or channel, whatever you want to trade with is fine, but it's risk management where the money is made or lost. Can you expand on that a little bit? Because I think it's a lesson that we don't talk enough about.
Yeah, well, I truly believe risk management is about 80% of the job. Trading is working in the unknown atmosphere.
Right.
When you come to your job at the morning, you don't know what is going to happen. It can turn out to be a losing day. It's and for many people, it's very hard to accept this. They think that if they will work harder on the entry strategy and the exit, that will make them more successful. But the truth is...
and then what you get is people that learn a lot about technical analysis. You get people who are encyclopedic in their understanding of, they just know a bunch of terminology and they know how, but that's not enough, right?
It's absolutely not enough, and it's not the major thing that you need to focus when you want to be a trader.
Right.
I have a lot of examples for seeing traders that having the same entry, one would be a winner, one would lose the account. It's only about how you actually manage the trade and what you make out of it. I saw traders that did the opposite at the same time. Both of them could lose because the market has its own way. It's not working in from A to B. It's working from A to B with a lot of zigzags in it, and it's I call it like pulling the carpet from the feet of the traders, so everybody can fall on this. So,
well, you could have two traders take the same exact trade. One trader uses a lot of leverage and can't stay in the trade and can even lose their entire account. And the other trader uses no leverage and it's no big deal, and the trade eventually goes to their profit target. So it's the same trade from technical analysis, but it's risk management that made it a win or a loss.
Yeah, and I think risk management is also about how comfortable you are with the position that you're making, and it's also about understanding that the market is not expected. I've created this method. I call it scenario-based management. And what I try to teach people about this is that when you enter the market, you would still need to be attentive to your trade because many things can happen, can evolve from that. What I'm trying to teach people is that they cannot leave the trade once they are entered the market, they have to look at it and always reassess the position all of the time. And this is also part of proper risk management. It really has to be something that is with the logic of the market, with the waves. It's also involved on how your personality and how your maturity is allowing you to hold the trade. And of course, it's being attentive for the whole cycle of the trade.
Right. So later on, I do want to talk about technical analysis, because I think we have a gentleman's disagreement about it, but I don't think it's a big deal. I want to talk about your business model, because let's say someone out there's got a strategy that's working. They don't have access to a great amount of capital. Tell me what happens if I want to join this model and get access to the fund's capital. I'm not going to be paying every month, even if I'm not profitable, over and over and over again. It's a one-time fee. What happens next? What are my goals? What are you expecting me to be able to do? And what are my constraints?
Well, first, when we've created the program of the 5%ers, we wanted it to be very transparent and straightforward. So when you pay your entry, you would understand what you're paying for and why the cost is. So you're actually paying for the risk that we're taking with you while you're being evaluated.
Okay. So I pay, let's say I pay $400 to join the program, and then how many other payments do I have to make? Any subscriptions or anything? No, right. Okay, that's what I love about your business model. And then what you're going to do is you're going to allow me to trade, but my maximum losses are going to be $400.
Right. Yes. Basically, we're looking for talented traders. The first phase, which is the evaluation, you will be receiving a limited funded account, and but we're going to share the risk, meaning that whatever you paid for your enrollment is what we are willing to risk with you. So we keep it very low. It's like it's based on 4% of the account that you receive on the evaluation. And once you proven yourself to be successful, we have a guaranteed scale up program for portfolio managers. Is that when you are showing consistency, you will be scaling up over and over. With that, we encourage you to play tight risk management, but you will be rewarded as if you were doing 10 times bigger.
Yeah, that makes sense. So what happens if a trader joins the program and they're in a trade, and let's say their cumulative losses are $350? What happens if the market gaps open and the loss exceeds $400 all of a sudden?
Well, then it's our trouble. It's we cover the losses for this, and we also cover the losses after. Once you become a portfolio manager, you don't have any costs whatsoever. So once you pass the evaluation, you are actually a risk-free trader, and we take all the risk. But what we do in our backstage is we're constantly monitoring our traders, and if we see any diversion from the plan, we give notification, we keep communication, and it's after all it's a business of people to people.
That makes sense.
Yeah.
You mentioned you might observe that someone is deviating from the plan on the back end. What does it mean to deviate from the plan?
Okay, so that's the risk management that we are asking for, that you apply on your trading strategy. Basically, it's stop loss, it's the maximum leverage, we call it exposure. I'll explain why, and a drawdown. So first, we don't want you. We want you to respect the deposit that you're giving, the capital that you're trading. So that would be the drawdown. The drawdown for the basic plans are 4%. We're expecting from you not to lose more than 4%. The way that we calculate drawdown is like like traders should calculate drawdown, which is relative drawdown.
Right.
It's not an absolute drawdown, meaning that from whatever high watermark you were making, you still trading up your 4%.
Right.
The next thing is stop loss. We require to have 1%, 1.5% stop loss for every position. You can do less, but you really have to have it in the system, and we really have to see it. So it's 1.5%. If you consider this with 4% maximum drawdown, then it really makes sense. I mean, you can.
Sure.
The next thing is leverage. We call it exposure. We call it exposure because it's a dynamic leverage that we align. Basically, it's 5-to-1, and we simplified it. Instead of asking you to calculate the market value of your position, we say, okay, we give you a fixed lot size that this will be the exposure allowance.
Right.
So let's say for the 10,000 account, it will be 0.5 lots. Then we have this thing that we encourage traders to hold on winner positions. So if you have a winner position and you lock your stop loss beyond your entry point, then you actually release that exposure and you can add on. These three elements are the risk management that we are requiring. And if you deviate from these, you would get some notification and we'll communicate with you. We will tell you what to do, and we just and if you will be willing to change this, nothing really happened.
Okay, that makes a lot of sense. How many traders are in the program now?
Currently, we have more than 600 active traders.
Oh, that's great.
It's about 120 that are portfolio managers, meaning that they had passed the evaluation phase.
What's the largest funded trader? How far has someone gotten in the program?
The program is limited to up to 1.28 million. We have a trader at 500K account.
Oh, wow. That's awesome.
The interesting thing here is as bigger as the account is, it takes longer for traders to make that milestone, the next milestone.
Well, it's always 10%, right?
Yeah.
So yeah, that makes a lot of sense though to me. That it's Steve Cohen, the hedge fund manager, said one time, the hardest thing to teach a trader to do is to trade with more capital. So I can imagine that as the capital gets increased, it becomes, but it's still the 4% drawdown and the 10% milestone.
Right.
So if I'm in the program and I'm at $500,000 in capital, and I reach the $50,000 10% mark, $25,000 of that is mine. Like the payout is 25. That's incredible. That's a really generous. That's a super generous payout.
Well, we're in a competitive world, so and we're competing for the talents,
right?
And so we're trying to pay good. Sometimes we get criticized that we're not generous enough. We're not giving 80%. Sometimes people try to negotiate this. We say we give better growth and faster growth plan, and that pays out.
I don't want to sign up for a program where I might be paying for 24 months. I don't want to do that. I don't want to be a part of that program. I want to start. I want to put some money into the program, and then I don't mind sharing 50-50. That's fair. If I provide a strategy and a technique and an ability, and you provide the capital, I think that's fair. That's how the world works, is 50-50.
It is, and we try to be even more fair than that. When you trade with us, you're not obligated to trade just for us. I mean, you can still trade your own account. You can still have your own clients. You can trade with
and
other
I can also
funds.
Trade any strategy I want.
Yeah.
I don't want to be told what strategy that I can trade.
One more thing, there's two important features about being paid. Is one that we're paying every month for whatever you make, no thresholds, no minimum, no maximum. Whatever we owe you, we want to be flat at the beginning of the month. And once we pay for your profits, even if you were not making the next milestone, it's not being deducted from your proceeding to milestone.
Yeah.
So because if you the logic
so
is once you're making profits,
you share in those profits.
We share those profits, and once you're making enough profits, we want to give you more capital to trade with us. So
that's awesome. What if if I get to $200,000 in capital and I go insane and I try to blow it up? What if I suddenly start taking trades that are off plan? Does your system ensure that I can't be my own worst enemy? Does it it knows that what I'm trading, the size that I'm trading, and it knows if there's a stop loss in place?
Well, we've worked a lot about our monitoring and our risk management of the whole fund. So what we're doing is, if you are exceeding any of the risk management features, our monitoring system would automatically hedge your account.
Okay.
So, and at that moment, it will be locked.
Okay.
Even if you see that trade in your terminal,
Yeah.
it's actually being hedged. And then we will talk to you and we
Work something out.
And also we do not pay any profits that are made with risk violations because of that reason, because we actually hedge these trades automatically. So this is the way that we manage to keep safe of the funds. If somebody at night or doing something very quick, we are fast to respond automatically.
So where does the funding come from then?
We're associated with a private fund that they have deep pockets. This is part of the setup of the business of the Fivers. The Fivers is actually more about the recruitment interface, and we are working with a fund that have deep pockets that are willing to accept our activity with the risk management that we require, and we manage the activity and the trading activity, so they're happy with the results so far. So in that sense, we're capable of receiving enough traders.
Right. If you have great traders, you're going to have the funding.
Yeah, and also we're not very aggressive on marketing, so we're not bringing the quantities that we cannot deal with. So,
So if you go to the 5%ers website, I love this quote, and I want to talk about it. Many come with an attitude that the market can be resolved with simple things like trend lines, trending channels, chart patterns, candlestick patterns, indicators. All these tools are mathematical interpretations of the market, but when you remove the math, the market looks much more unruly and chaotic. So if those strategies are just mathematical interpretations, what else is there if there's not some way of drawing lines or interpreting it or measuring it? What's a valid strategy then if it's just all chaos?
Well, I'll give you a simple example.
Okay.
A candlestick pattern.
Sure.
A doji or a hammer, whatever it is. People are being taught to have shortcuts. They are being taught that if you see harami, if you see a hammer, you should do this and that. And this is the trouble with education for the financial markets today. Many people are looking for the too simplistic and the graphic interpretation of something that behind the scene has a logic, but they don't really understand the logic.
So what would you use instead?
I think there are three types of analysis on the market. One is to analyze in a technical way, I call it the shortcut way, unless you really understand the third kind. I'll
get to there in a moment.
There's another one which is fundamental, but I think the fundamentals are they are good for the very long term, but they don't give us the actually trigger to enter. You really have to know how to time your entry if you want to be efficient in your trading. So you can not just rely on this. The third kind is really understanding why the market is turning and breaking levels or respecting the levels. Why is that happening? And this is the genre that's called maybe price action or supply and demand, or deeper understanding of the market. What I'm trying to educate people about the market that it's not a matrix of numbers that are being pushed onto you and you have to react to these numbers and data. You have to look at the charts and try to read what's going on in the world, in the markets. And people too often forget that the markets is a presentation of what is really happening in the world. In Forex, in currencies, it's about the commerce relationship, it's about countries, it's about politics, all these macro events that are reflected in our charts. And in the intraday, we have also the speculators that are playing in this game. So there are a lot of real participants in the market that are creating balance and imbalance of supply and demand. And this is the reason why price move. And if you look at chart and you try to read a narrative of what's going on, who's joining the market, who's accumulating orders, who's distributing, if you can see all these tricks, you would have better insight for what you want to do with the market, what you want to do with your trading in it. So that's what I'm implying for. This is what I'm trying to educate, that you would have deeper understanding for why is the market turning or breaking or respecting levels.
And when you know the why, what does that do for a trader when they do know that?
So first, you can combine it with any trading tools that you're having.
So technical analysis then could come into
Yes.
play. Okay.
Then you would also understand all these shortcuts that you were taught, what they're actually meaning. What is why a candlestick that its name is Harami, what it's really telling, what's the price action behind it, what's going on, and that tells you something.
Right.
Okay, not just a shortcut, do this and that when you see it. It's not just a continuation signal.
So what you're really saying is you don't want traders to think that there's some way, oh, you just see this and it's automatically going to result
Right.
in something else.
Yeah.
There's
You really
something-
have to understand what happened. Why is this rendering of image, why it was created? What are the forces that had
Right.
created that image? I met with this guy. He was managing a trading room in Israel, and they were trading stocks, local stocks in the Tel Aviv stock markets. And he told me that he would collect these bright people and he would teach them what to do. And he had this trader. She was like 22, 24. She didn't have any background in trading.
Right.
And so he gave her to play with very low liquidity stocks. And every morning she was realizing that when she placing order into the market, she creates moves in
Right.
the market.
Right.
So she was bright enough to actually use it as a tool to attract traders and to create false moves in the market, get traders to do something that they see in the chart, and then to sell them after at
Right.
more expensive prices or to
Sure.
exit. And she would actually use the liquidation elements in the market, and she would actually use it. And he was describing me this this pattern that she was doing, and I was just plotting this in my mind. And I told him, you know what? This is a Quasimodo pattern. Quasimodo pattern, if you don't know, it's like a unbalanced head and shoulder pattern. So, and he didn't realize that I pictured this to him on the whiteboard, and
Right.
he said, yeah, this is what you do. And she doesn't know that she's creating patterns, graphic patterns on the chart. She would know that she has a tool that she can fool traders, but
Right.
it created a pattern, a graphic pattern that we all see. So we cannot actually look at this as a shortcut. If you see a head and shoulder, do this and that.
Right.
You really have to understand what it tells you in terms of narrative, in terms of participants in the market, and that will tell you a lot more about your next bias.
Sure. What's your goal as a company? What do you want to achieve?
We're trying to give better service and support to our traders in a way that will create harder efforts for new competitors to join in.
Right.
So what it means for the traders is that we're going to give much more support in terms of the risk management, in terms of mental support. We'll create workshops and master classes, and we will work harder on the trading plan and on the psychology. We will give much more added value for the traders. Until now, they were basically trading their own, and they were just performing or underperforming or overperforming in our systems. And now we're going to add more the human side to it, the more support. We've done this with a few traders already, and we are ready to launch it as a whole system.
That's
First
great.
for our PM traders, the portfolio manager traders, and then we want to also apply this to our evaluation. So we can help out traders to actually pass the evaluation better.
Can a trader log into the website and see their performance relative to other traders in the program, or their own performance ranked, or anything like that?
No, they can see they can see only their own.
Okay.
We're not about community trading. I think we get this question quite a lot.
Mm-hmm.
People want to have this chat where they can talk with other traders. And
I don't want to talk with other. Yeah, that part.
I don't like the thing with community trading because in my vision, traders are coming from many different backgrounds, and I don't want them to get new ideas that will interrupt what they're doing best.
That's one of the worst things that can happen to a profitable trader is they could learn a new strategy. Right. It's like almost the worst thing that you can do. Yeah.
Right. And I remember when I was trading, I didn't care for any chat room that would discuss something else.
Right.
I would like to talk with people that can dive deep with what I do. So I would have my own dedicated trader team, my trading pals were doing the same thing. So I can consult with them, I can learn from them, but I don't want to talk to anyone that does something totally different.
Right.
What's the use of it?
But what about like on the back end? Can a trader see how they're doing or their ranking, or they can see?
No, there is no ranking because it's not a competition. I'm not a competitive guy.
Mm-hmm.
I think whatever I can earn from the market, I should be happy for it. I don't care if you will make more than I do. And so I'm not encouraging competition.
Okay.
And I also think that every person has its own pace. Why should I frustrate you with others' results? When I used to be in forums and in chat rooms with my friends, they would show you their perfect trade, the perfect entry, the perfect exit, and you would and I would be embarrassed to show mine because I enter not in the perfect way. I suffered drawdown, so it's not pretty. And I have this one article in the blog when I'm saying that people are looking at these classic trades, but trading is not about having a beautiful trade. It's not about taking the most that the market could have given you, because that would make you frustrated. You should just take whatever you are happy with, and if the market gone further than that,
no big deal. Yeah.
It's no big deal. But if I'm in competition to show a pretty chart to my friends, then this is interruption. Will get me on the wrong behavior the next time I will come to trading. So I don't like this pressure. So this is why we're not providing community tools or forums and stuff like this. but I do know that it has more benefits to it. So it's still I'm not sure what we're going to do, but for now, what we're going to do is we're going to create maybe clusters of small teams, intimate teams, where we can discuss psychological elements in trading, the mental thing, building a solid trading plan, sharing these ideas. I think this is the focus of what we can support traders, and not giving these tools where people can just get lost.
Yeah, and you don't want to encourage people to start sharing with each other the best strategy, or here's the way I do it, and then everybody starts doing the same thing. You wouldn't want that in your, just once again, even if I'm copying someone who says they are successful, I could be unsuccessful doing that because I don't know all of the different scenarios that they trade in. All right, everyone, so you've heard from Gil. I love this program. As soon as we're done with this interview, I'm going to actually sign up for the program myself. And if you want to join together with me, just click the link below and you'll get all the information you need. I don't think it takes very long to sign up. There's just a simple process that you go through, and I'll see you on the other side.